I'm William Grantham with IchimokuWeather.com, and in this video we're going to be taking a look at the sectors and sector rotation. First, we're going to take a look at the weekly on the 9 main sectors. Then we're going to take a look at the daily, and then you're going to want to stick around for this. We're going to take a look at the sectors and their ratio to the overall market and see who is outperforming whom. This is weekly charts and consumer services, which it can also be called discretionary or cyclical. We can see we came into the year on the weekly with the blue Tenkan-sen above the red Kijun-sen, and it's right now riding up above the cloud quite a ways. Same thing is happening with technology. We have an open bullish channel going on, as well as industrials. We can see the channel working here as well. However, on this one, looking at the top three, our 200 period simple moving average, which is the black line, is up above the cloud, where on consumer services it's inside the cloud, and in technology it is under the cloud. So technology is certainly on the weekly chart doing better and being above the 200 period simple moving average. In our middle row, we start off with basic materials looking the same, having an open bullish channel with the Tenkan-sen above the Kijun-sen working on the weekly. On energy, oil and gas, we do see a little bit of difference here. We came into the first of the year with the blue Tenkan-sen and the red Kijun-sen underneath the cloud, and then market action did move up, having a Kumo breakout where market action moves above the red Kumo cloud. And right now we do see a bit of consolidation happening, and we are underneath the 200 period simple moving average. Consumer goods is looking similar. However, we do see that the blue line did come down and did touch the red line here on the weekly as a consolidation happened after the first of the year, and market prices did regress a little bit into this consolidation zone, enough to make the blue line come down and touch the red line. But then market action took off, and we do see that right now we are above both the blue and the red line, and we're above the cloud, and the 200 period simple moving average is inside the cloud. Healthcare is looking like our top row with an open bullish channel between the blue line and the red line, with market action running through, coming down a little bit inside, touching the bottom Kijun-sen, but right now is way above both the blue line and the red line. Of these 9 sectors, utilities seems to be having the most problems, where we did have a consolidation at the first of the year, then a drop down to test the top of the cloud, and in doing so, it caused the blue Tenkan-sen to be pulled underneath the red Kijun-sen. However, the cloud did provide nice support. It's right at the 200 period simple moving average line, and market action then went up above the blue and the red, and now we see that the blue and the red lines are kissing, and they could be separating if market action can continue to move up. Finally, on the weekly, financials is doing fantastic, looking like the top row, where we do have a bullish channel with the blue Tenkan-sen line being above the red Kijun-sen. Here we are on daily charts, and consumer services through the month of April have been doing quite well, moved up enough to be able to bring the blue line well above the red line. However, right now it is consolidating a little bit as price action is bouncing around the blue line. That has caused the red line to go flat, since we have not had a new higher high or lower low in the last 26 periods. The red line will remain flat until it drops out old low action out of its calculation, and it might tip up a little bit, or it could take market action itself going higher, or even coming down lower and challenging it and going low, before we're going to see the red line move from its flat position. Being flat gives us a very strong line of support underneath us. We see a very similar pattern going on here in technology. Industrials is going just a little bit better. Throughout the end of March, we did have a challenge to the bottom of the Kijun-sen, but then coming into April, market action got above the blue line and has been riding the blue line ever since. That pattern is also reflected in what's going on here in basic materials. Energy, oil, and gas has seen a little different situation. Market action after March came down, challenged the top of the cloud, was able to hold for just a little bit, then came inside the cloud, and then the bottom of the cloud did hold as support for quite a little bit before market action was getting enough steam to be able to move up above both the blue line and the red line, and even a little Kumo breakout getting up above the cloud, but it was a false breakout, and market action did fall back inside the cloud, and that's where we find ourselves right now at the start of May. The chart on consumer goods looks similar to consumer services and industrials and technology. It has a nice run-up staying above the blue line until the end of April, where it did come down inside the channel. Market action bounced around inside the channel and is now closed at the 1st of May right at the top of the channel line, right at the blue line. Healthcare was inside the cloud during March, and then in April got up above it, has been riding the blue line up, and has just recently at the end of April had a bit of a pullback inside the channel. Utilities look similar, had the same pullback inside the channel, came all the way down to the bottom red line, and then bounced off of it and is now back up to the top of the channel line, as same as consumer goods. Financials had a bit of a pullback at the end of March going into April, enough so that the blue line came down to the red line, although at the 1st of April it did separate, and then market action then rode above the blue line for a little bit, falling into the channel here just barely, and then is now well above the blue line as well as the red line. Now it gets interesting. We are going to look at the ratio between the individual stocks and VTI. VTI has 3,755 stocks in its ETF, and it is comprised of many elements within the different sectors. We can see that in XLY. We do have 98% of XLY is in VTI with a 10% overlap. In technology, 97 with 22. This is the highest number. There is the most weighted of technology in VTI. And then it looks like industrials has 7, materials has 2%, energy has 2%, staples 5, healthcare 11, utilities only 2, and financials at 9. We do have over 90% of each of these individual ETF sectors inside VTI. So we're going to see what the ratio is between each individual sector and VTI. These are our daily ratio charts. The first element on the chart is the initial sector, and the second element is VTI. So when the chart is going up, that means that the first ticker is doing well, and when it is doing bad, that means the second ticker is doing well. So as consumer services has been coming down, that means that VTI has been outperforming consumer services. Right here from March up and then into April, it looks like consumer services was starting to outperform VTI. And in fact, it had a little Kumo breakout here on this ratio chart until it went into a bit of a consolidation zone into the end of April. Technology, which looked good on its individual chart, we can see is struggling a little bit in being able to outperform VTI. It has been going down, which means that technology was underperforming the overall market and then had a little bit of a spurt here coming up above the cloud, but then was not able to hold this position, got up to the 200 period simple moving average on the ratio before falling down and is now stalled at the bottom of the cloud. We'll see if the cloud can provide support on this ratio on technology versus VTI. Industrials, which looked good on the individual chart, still looks fairly good here. Compared to VTI, it did outperform going from February through March and then had a bit of consolidation zone where we are right now. We're underneath the red Kijinsen, and the blue line is below us, our Tenkan-sen. And right now we are inside the channel and finding support at the cloud line. So if industrials can continue to move up, we might see it start to outperform VTI, the overall market. Basic materials has been moving pretty sideways compared to VTI, and just recently from April was bouncing off the 200 period simple moving average and moving up into a strong bullish stance with a possibility of being able to outperform the overall market. Energy did do well against VTI going from February into March. However, during March, we did see VTI outperforming energy all the way into the last weeks of April, where then energy was starting to outperform VTI again, but came up and found resistance at the cloud line and was not able to get inside. So we'll be watching this to see if energy can consolidate here and move up a little bit higher against VTI, and we'll see if it can outperform VTI once again. Consumer goods, defensive. People are not moving money into defensive, even though its chart looked good by itself on the daily and the weekly. With consumer goods versus VTI, we can see that it has been underneath the cloud and riding a bearish channel down through the end of last year and then into this year, got into a consolidation zone, moved up above the cloud, but it was a false breakout, was not able to continue with the momentum, fell down to the bottom of the cloud where it was support for quite a bit, and then market action came to the top of the cloud again, was not able to even get up to the top but touching it, fell out of the bottom of the cloud, and now with the ratio between consumer goods and VTI, we are in a bearish downtrend. We see something very similar happening with healthcare, where it's been falling in comparison to VTI over the last several months, and then came up and challenged the top of the cloud, was not able to get out, and then immediately came down and fell out of the bottom of the cloud. Utilities is faring a little bit better after having a large downturn, found a nice bottom, came up and challenged the top of the cloud, was not able to get out, fell inside the cloud for quite a ways, and then hit the bottom of the cloud, popped up above the top of the cloud, got out, was not able to continue with the momentum, fell back down to the bottom of the cloud, and then just recently has a nice little gap up above the cloud, a nice little Kumo breakout on the ratio of utilities versus VTI. In ranking the different sectors, it does appear that financials is number one versus VTI. It came up to the top on March and then consolidated down a little bit, found support at the bottom of the cloud mid-April, and then right now is popping up above the cloud, has a nice green cloud. It's almost starting to twist into red, but it is a green cloud. We do have upward momentum, and it looks like financials is primed to be able to outperform VTI in the near term. For the number 2 spot, we're looking at basic materials versus industrials. Right now, industrials does have the blue line below the red line, and on basic materials, the blue line has just barely in the last couple of days moved above the red line, giving it an edge. So we're going to call materials as the number 2 place in the ratio race between the individual sectors and VTI. So that put financials as number 1, basic materials number 2, and industrials as number 3. The next best looking chart would be consumer services. It is above the cloud and does have the blue line above the red line. However, notice that it is below the 200 period simple moving average. So it does have that as resistance right above. Technology is coming in at number 5. It's looking about the same as consumer services. However, it has fallen into the cloud and is right now finding support at the bottom of the cloud and could be falling out of the cloud if we find more weakness in technology over the coming weeks. On technology's regular chart, it could still be going up, but it may not be going up enough to be able to offset how much VTI is going up. So technology could fall out of the cloud here on a ratio chart while on its regular chart still heading up. Energy comes in at number 6, coming underneath the cloud, but coming up and challenging the top of the cloud. Then coming in for 7, 8, and 9, we're looking at consumer goods, healthcare, and utilities. Now, utilities is above the cloud, and so we're going to call it as number 7. And then healthcare is in a little bit better position than consumer goods. Consumer goods does have the blue line below the red line, where healthcare does have the blue line above the red line, which means that its most recent market action has been marginally better than consumer goods here on our ratio charts. So healthcare comes in at number 8 and staples, consumer goods, comes in at number 9. So there we have our rankings. We have financials, materials, industrials, services, technology, energy, utilities, healthcare, and then staples, looking at ratio charts and comparing them to VTI. And so that's how we use ratio charts to see how individual sectors are doing versus VTI. If you are interested in learning more about ratios, I do offer a class that includes this in its first module, and all the first modules of my classes are available for a free preview. So you can take a free preview on my class here I'm showing on the screen on ratios, specifically intermarket ratios. I'm William Grantham with IchimokuWeather.com. May your trades be true and your profits strong.